and thanks for joining us for the weekly trading tip, normally done via video like this one. In the last couple of times, we spoke about Bollinger Bands and support and resistance levels for exits. And today I want to talk about a few different ways to enter a trade, and one that I will sometimes use. So today I want to talk about one way I like to enter trades that not too many people use. A lot of traders and clients will enter on market or on a limit order, which is or better. What I'm going to show you today is another technique to enter trades, and that is using a stop. And that is to place a buy stop higher than the current market price, or to sell using a sell stop lower than the current market price. And you may ask, why will I do that? Because, quote unquote, I might be giving up some potential profit or enter at a worst price if I do so. And this is where what I call price confirmation, meaning I will use the buy stop or sell stop entry when I want to see that price action is confirming whatever signal I'm about to use to enter a trade. And I'll give you an example, a couple examples right now. We're looking right now in the crude oil market, and we're looking at a 17-tick range bar chart. And you'll see two main signals, a red triangle pointing lower or a blue triangle pointing higher. And the red triangle is a sell signal for me personally, and the blue triangle is a buy signal for me personally. So the concept of price confirmation, the way I look at it, simply says just because you got a signal to go long or to go short, I don't think anybody has a crystal ball. So I'm looking for ways to filter out and hopefully increase my chances of the signal being a good signal. And what I like to do is, and I'm going to switch right now to a 15-minute chart, or it's an 18-minute chart, but just to give you a better example, is I like to see that price, if I'm getting, let's say, a short signal right around here, let me go ahead and highlight it. If I'm getting a short signal right around here, I want to see that price actually take the previous bar low if I'm going short, or that it takes the previous bar high if I'm going long. So in this case, this is obviously a good example of how price took the previous bar high and was a successful long signal. And here we got a short signal, but price did not take previous bar low and quote unquote saved us from a bad signal. Doesn't mean that you cannot get a signal and price confirmation like right here and still the trade is not going to work out. But it did on the second time when we're looking at this signal. Going back, I'm going to go back right now to the range bar. So the price confirmation and range bar together is a good way for day trading, again, in my opinion. I'm using here as an example the crude oil from today's market, which is March 25th, 2019. And I like to get signals and then see if those signals actually get confirmed by price action. So when I get a sell signal, I want to see that we took out either previous low, or in some cases, I will actually look for immediate support and resistance levels and see that we get a signal plus confirmation by either breaking support on the way down or breaking resistance on the way up, like in this case and in this case. And if you watch some of the previous videos, you'll see that I'm still using the Bollinger Bands. I do have my parabolics with me. Okay, I do have a modified inverse fish indicator that I like to use. And that's about it for today. If you visit us at canontrading.com, you can actually sign up for a free trial of those indicators that I'm sharing here in the chart. And you can plug them in your own charts using 3 types of different charting software that we offer. This specific one is using CQG. And thanks again for visiting. Futures trading is risky and not suitable for everyone. And I hope you were able to pick up an idea or two to try and improve your trading. Thanks again.